The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Alrighty, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. Don't forget, you can listen to us on TFNN.mobi, TFNN.com, at Tiger TV, and right inside your e-signal platform. Let's check out where the markets are at right now, and let's look at our daily update real quick. And okay, so the daily update, just pulling that up for you. We got the S&P is currently up 25 points. That's right, we're in positive territory today. And let me put just a normal chart up here. I'll read the markets off for those. We're watching some activity there. We got the Russell is up 19. We got the Dow is up 244. And looking on over at, we'll look at a few more markets. Let's check out gold. Gold currently right now, folks, is sitting up. You got to let that 244 up after the big swings down. Gold is currently sitting up 9 points on the day. Looking on over at natural gas, it is in positive territory. Oil's up about 43 cents. Copper is also positive. And looking at our ags right now, we got corn is down a few points, soybeans down a few points. Bonds down quite a bit. Big move down in bonds. Let's go ahead and look over at this bond chart real quick. I'll pull that up as we're just going through different things. And I gotta update that data feed. Hold on one second. That always helps to have all the pieces turned on. Let's see here. Going on into dollar index. Dollar index also slightly territory. So basically just King dollar getting hit right now. And it's down negative 0.45. We got euro dollar is currently up 25 pips. So euro stronger than the dollar today. Euro yen getting nailed. So yen way stronger than the euro, down 148 pips. We got euro pound. Euro getting hurt against the pound. It's currently down 45. Pound stronger than the dollar, up 119 pips. And we have that auto update here any second. It's just taking a moment to get itself up. And I guess while it's up, we'll just put this piece over here. So I was trying to do that first. Let's see. Let's go into pound yen. It's currently down 96 pips. We got dollar yen's down 161 pips. So dollar just getting hammered against the yen. Yen getting a lot of strength there. Aussie yen down 54. Yen stronger across the board today. We got the Aussie dollar is up 56 pips. Dollar franc is currently down 16. Dollar CAD is down 63 pips. And we got the NASDAQ right now, which is up 54 pips on the day. Okay, so that gets us caught up on those markets. Let's go over. Let's take a look at our news and what's coming out in the news that we need to be aware of. Okay, so I'll pull that up there. We'll go through it and look at just a few important pieces and talk about what's coming up this week on the news that you can use that can help you in your trading. And today we had the pound manufacturing production report. So let's go through. Let's just get all the news all caught up. And for this week, and then tomorrow we'll catch you up for next week as well. And just give me one more minute here, just going through trying to make sure we're up. Doing well. Okay, there is a mic issue. 1 second. I don't know why. So we are on Forex Factor right now. We're looking at the news, and don't know why, but apparently there's a mic issue. So I guess we'll just fall off on the show and not go until I know that I can keep moving. Yeah, see. Sorry, we're just having technical difficulties. All right, what do you want me to do? Do you want me to keep talking? Because I don't know what to do. I got audio operator in my ear. Okay, so today is June 10th. Totally thrown off now. All right, looking on over here, and on June 10th, looking at the news. What news do we have coming up tonight that you could use to do your trades? We're going to have the Aussie employment change coming on out. Okay? Aussie employment change is happening at 9:30. So we'll be looking for an iron condor where we enter at 6 with a 11 o'clock expiration for a minimum profit of $35. So we're going to be looking at an iron condor on that. And I've been talking about this quite a bit in my last couple shows. So you definitely want to go back and look at the archives there. And I would talk about premium and minimum premium and how it works. And we'll go over some other lessons, but just to make sure you know that's the trade tonight that we're looking at. Usually it stays really in between that 35 pip range, and that gives you 35 pips up, 35 pips down. That gives you a 70 pip total where you can do the trade. Some other news to be aware of. We got the yen with their BSI manufacturing index. We got the Aussie with their MI inflation expectations. China has various reports. We got the United States coming on out with a few reports on Thursday, and you can use those to trade. They have some consistency to them. Looking at core retail sales, import prices, all having very minimal impact on the markets, at least on the FX currency pairs, that is. And so we look to enter the trade as early as 7 o'clock and expiration at 9 on this trade. And looking for a $35 profit with the news announcement coming out at 8:30. So usually there's not a whole lot of movement between these hours on this day when these reports come out. So again, looking for potential iron condor for 35 pips. Whether or not it's there or not, you just got to see what the pricing is. It might be because we've had some good implied volatility built in lately. But also it gives you an idea of just how far to expect a movement during that time frame. If you're trading, may want to sort of check, 7 to 9, draw a couple lines there, just know, hey, this is the usual expected move if you're a euro-dollar trader. CAD will have some reports coming out at 8:30 that don't have a consistent impact. U.S. unemployment claims, it comes and goes. A lot of times it can have it's not even happening. Other times, if it's a big number that's off, then we can see some big changes. But unemployment claims by itself, normally, unless it's just forefront and center and doing horrible, is not a big impactor until we get to actual NFPs and things like that on Fridays. And we don't have that this Friday. We got U.S. business inventories also coming out at 10 a.m. Usually not a big market mover. We've got natural gas, so make sure you don't forget about that. Natural gas is coming on out today, and that really, or not today, tomorrow. And often a straddle or strangle can have a good setup. Just shortly before the announcement comes out, if you can find good pricing and if you got your expected ranges lined up. A little later, we're going to have the CAD will be coming out with basically just a little speech by their Governor Pola there. So we can go over and we can go, what is that speech? Is it a big speech? Is it an important speech? And we can go on over to Thursday. And let's see, go right there. They're holding a press conference about the financial system review. So that actually could have some impact on the CAD and bring in some good little volatility right there. Going on in that night, tomorrow night, we got New Zealand business manufacturing coming out. That'll, of course, impact none of you yen or Aussie traders as well, being so closely related in their economies. We got not a whole lot happening on Friday, but we do have the U.S. PPI and core PPI. Very minimal impact. Probably going to be a flat Friday, okay? So we'll see. But, with that happening right there, entering at 7 for 9 o'clock, and that's usually a 25 pip move. So we're looking for a $25 iron condor on that trade in order to try to take advantage of basically the flat movement part. And we also have University of Michigan Consumer Sentiment Report. I've watched that one over and over again. It has very, very minimal impact, at least on a consistent basis. It's a university report. You may see a little pop in some of the indices for a few points, but it really, really backs off quickly. Okay, is the normal behavior whenever that report comes out. So that'll get you caught up through this week, and we have, I'll go over tomorrow. I'll get all the news together stuff, and we'll go over for next week to carry you through, because doing this now at a new time here on Wednesdays and Thursdays with the new trading lineup here at TFNN. We just adjusting the schedules around and to make things work even better, bring even more stuff to you. Okay, so you're going to have me on Wednesdays for my show. You're going to have me on Thursday, so this is now 12 to 1, Wednesdays, Thursdays, and then you'll have me on Friday also for the Bull Bear Binary Option Hour, co-hosted with Tom O'Brien and Tommy O'Brien Jr. Some of the top news that's coming out, we got Treasury U.S. yields reaching 7-month highs on the buns. So those are moving on up there. Canada stocks moving on up as oil has a little bit of a jump and their banks strengthen. Euro dollar gets to head higher on the Greek headlines that are coming out. And that's sort of what we're seeing happening in the stock market. So basically, Greece is our friend in the sense of, well, I mean, it's, there's a lot of ways to go with that. But the big thing is the headlines coming out. The Greek situation starts to play out. And where it's going to go from there, we'll see. But I mean, you can see the bonds and everything else moving on down, and you can see the yields going on up. So, it's not, I wouldn't say it's the end all solution here, but it gave a little bit of, there's a compromise deal. They basically said what they were saying was they wanted all their stuff put into one place. So they said they wanted one Greek reform up front, offering Greece a staggered deal on aid, and Greece was saying they wanted to put all their payments for the month into one payment at the end of the month. And they're like, okay, we think maybe they're backing down, and I mean, just all the stuff. You gotta love this. It's like, and we await Germany's denial within the next 30 minutes on exactly what just happened. So we'll talk about that more and what that means for you as a trader. We've got a lot of great volatility. We just got a surge off of it. Now what? Stay right there. We'll talk about it when you get back from this break.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Alrighty, folks, we're back here to the Diagnostic Trading Hour. And basically it's basically a report of Germany willing to compromise over the deal. Also, the ECB said they would raise the Greek ceiling to 83 billion euros from 80.7 euros. So, you know, it's not necessarily like complete resolution, I guess would be a way to put it. But there is some, you know, like sides are giving, I guess would be a way to put it. And, there you go. Okay. Anyway, so they're basically, you know, sides are starting to give a little bit. Greece is talking about giving a little bit. Germany's talking about giving a little bit. And, well, if one of the sides will give, then, you know, we'll have a resolution. So therefore, things pop up. Well, what does that mean to you as a trader? Well, that means markets pop up, and then they chill out and wait and see. As soon as we get an announcement that it ain't happening or somebody's not happy or whatever, things drop. We get an announcement that it did happen, and they signed it, then we get a pop in the market, and then things will chill out a little bit. So basically, it's the unknown that has the biggest move, and when there's either a positive announcement on that unknown or a negative announcement on that unknown, then we're going to see a surge in the stock price movement. I mean, you can see just the boom right there on the news whenever that did get released this morning. So, you got crude popping a little bit, hopping on over back to Forex Factory. Let's see, let's go. There's 1,000 sites. That's just an easy, popular one that I go to. And looking at the crude oil inventory report, go out there, we came in at negative 1.5, so we actually dropped a little bit. And we can go ahead and look at the actual crude oil report release. And what we could do is overall, we see the imports and the exports, and I mean they'll give you all sorts of numbers right there. But what we're looking at is this main one where we're going to get this actual of negative 1.9 million. And so we can go down, we can look, and it'll go through. It'll actually read off commercial crude oil inventories decreased by 6.8 million barrels from the previous week at 470 million barrels. U.S. crude oil remain near their levels not seen for this time of year in the last 80 years. So U.S. crude inventories remain near levels not seen for this time of year in the last, in at least the last 80 years. So that's pretty, interesting. That's a massive decrease. So not including the strategic oil reserves, that 6.8 million barrels from the previous week is a big, big, big decrease in the U.S. oil reserves. Yet, let's see here, we go over that big bond movement, but I also wanted to go ahead, now that we're on oil, and pull that up. And yeah, the bonds are just skipping all around. Let's see here, let me go back over. And I'm going to grab the oil contract. And I just want to go in and dig down a little bit with you and see sort of how it's moving around on this news, because this is some pretty big drop in supplies. It's actually one of the biggest drops in supplies that we've seen in a long time. And we're just now going into summer, and we're already seeing the drop in supply. So that could definitely be leading to, obviously, higher prices. So. And you can see, that was one of the biggest, that's a massive move right there that we got. We got a, big move of about 40 cents right off oil inventory, just flying up, coming on back down. And leveling off right now at the 0.5 deviation. But big drop in oil supply, and that trend continues. We keep seeing that it's not picking back up. Then we should continue to see oil to start popping on up and really making a continued rise. That pushed it solid above that 61 level, and sort of drop back down. It wasn't able to hold the 61, but if it keeps going, we're going to see that. And of course, that's going to make gasoline go up, but it's sitting right there up on that. If I go over, I look at maybe a 10-minute chart a little bit here, and we'll look at this for you. I'll make a couple updates on the chart. We just want to sort of get a handle on oil and where it's going and what it's doing. And what we can see is, let's see here. Let's go in and change one more thing. We're going to change one. Right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And a little bit of a ticking noise there in the sound, so I'm not quite sure if that's on my side or your side or both. Anyways, we got I was going into the oil, and I was just saying, hey, the oil is dropping down. It's actually the lowest inventory level we've seen in 80 years. This definitely, I think, is going to be the marker for when oil turns around and actually starts making its move on back up. And I think we're going to see a pretty strong Marv move. Sorry, reading things from other people posting. And again, this is directly from the EIA.gov report about U.S. crude oil inventories moving on up there at levels not seen since the 80s. And if you go on, we're going through it. Total gasoline inventories decreased by 2.9 million barrels, but they're still in the upper half of their average range. Finished gasoline inventories increased, while blending components inventories decreased last week. Distilled fuel inventories increased, and propane inventories rose up along with it. So the oil imports averaged over 6.6 million barrels a day, actually a little bit lower than same day previous week. Over the last 4 weeks, crude oil imports averaged about 70 million barrels per day, 2.3% lower before the same 4-week period last year. So now that could be due to less usage, due to more, cars that are efficient, things like that. But this one being probably the biggest concern, also what caused the big pop in oil. And if we see this trend continue, where the reserves are really, really, really low, then either they're going to need to open up some more oil wells, which will happen automatically as price goes up. Okay, so price goes up, people make more money on oil, therefore they're willing to uncap those things, put more oil. I mean, once oil is going, it's going. But drill more, and invest more into finding more oil out there. And so it's just so low right now. A lot of the companies have decided to back off and do drilling. I know some here in Texas that they have methods that are very accurate at finding, basically they don't have to dig incredibly deep to find oil, and they can do it really, really cheap, and still make a profit even with oil at 40 or 50 bucks. They're still able to be profitable. So those companies are trucking along. The ones that don't know how to do that, they're the ones that back off, and they go for just the deeper oil, stuff like that, and often bigger pockets in that same process. And they're going to back off until cost gets, until payout gets high enough that it makes it worth it. All right, so that gets us caught up on the oil inventory. And we talked about EIA. We talked about ECB raising, limits and everything else. That being good news for the market. And we see oil, like I said, popping up, and moved at 2 deviations yesterday. So sort of like somebody might have had a clue that was happening. What do you think? So got a solid 2 deviation move, like to the tick right there, and then backed off down a little bit, and then bombed back up to 0.7. And like I said, we've broken 60, like solid broken 60 with some good volume right there, and then we had some decent volume coming on up. And now we're touching on the 61 level. It's backing off a little bit, so moving on up to most likely back up to a solid 70 or 80 at this point. And of course, we'll be breaking levels as we go. If you want to know when, where's it going, when's it getting there, all that fun stuff, back on up and start putting in your magnets. And if you go back and do the magnets, you have to go further back now because we've been so low for so long. Okay, we've been down in the 50s. So you're going to have to really scroll back there and, get as much data as you can. And in Ninja, what you do is you'll load data series. You actually have to change this. And you're on minute data, so you can change it to whatever you want to there, but you can go in and change it to like 720. And hit apply, and then you got to let that, it'd take a minute, but pull out as much data as you can. And you just got to get back to where the market was higher than where you currently are. And, we have a couple pockets where we've hit this price and fallen back down off of it. So it's really going to have to bust through that. And that would be one of the first things that you're going to want to go look at is when did it hit this price last? Okay. And what was the volume like? Because it's going to need more volume than that to bust through that level. Okay. And let's see here. We got the, so we'll look at that here in a second. I'm going to let that come on up. And we'll also look at the Dow. We'll look at the euro dollar and walk through a few of these releases that have come out. We got news all caught up, but we're waiting on that one to cover. And then we can talk a little bit more about some spreads here in a second and some iron condors. Okay? So, first thing is, we got these levels. Let's go and let's look at some magnets. And, market right here is around 61. Let's back off a little bit. Let's see where we got, what we could define as high magnet levels. And looking at around, potentially 15,000, 14 to 15,000 contracts. We'll go with, right around 15,000. Okay. I mean, 14,000. I keep saying 15. So right around, 14,000 contracts or so as being a very defined magnet. All right. And you can see it sort of even respecting these current magnets over here, these current magnet pricing levels at this point. This was really the 60, which doesn't surprise you, right? So we're at a big round number at the $60 mark. That's what's happening right here. And so it's hitting 60 and it's just oscillating right off of it. So 60 is obviously going to be a magnet just in and of itself. It's a round number magnet. It's also, we're getting a lot of volume right there. Traders are buying, selling, buying, selling, buying, selling. Which way is it going to go? Okay. And then finally, it decides it's going to go up. Where is it going to go up to? So that's the next thing we want to figure out is, above that $60 price, we got to scroll back here. Got to see it tried to come up on that 60 and dropped right on back down. But what about over here? We came down and we got a little bit of a spike right there. Not really as much expected volume as normal, and that was on a oil inventory day. So I'm going to be sort of cautious about making that just a hardcore, magnet on that trade. It was a down close bar. That's going to put us down here at 60.55. And again, it was a news report spike. So I'm not going to give that magnet really any credit. Due to that, it didn't go anywhere off of that 60. It just popped up, and actually, if anything, it came right back down to it. And then it busted through a little bit and then chilled out before. What did it do from there? It went on down and just moved on down. So let's see if we can get a magnet price. Okay, here we go. Now we got one right around 14,000. It's actually an up close bar right there. And the high of that also ended up becoming the settlement price. So it was actually a high volume right on the close. And so we'll go ahead and we'll go with the settlement on that one, because again, it's a high volume bar right on the close. There, 230, and that puts us at 61.28. So that's gonna be our next target. Also, drawing that right there, we can see one, like, how is that real? I mean, is that a good idea for a price? Well, we can see right here, we spiked up in the morning, came down off of it, came back up to it, couldn't quite break through it. Magnet, right? Falls back down here to our big 60 magnet level. And even on the news, when it spikes up that day, okay, on the news when it spikes up, we see that it hits that magnet level, which is also settlement, and comes right on back down. Okay, so now we got one level, really above the market that we can use. And so let's see what happens over here. This is again that 60 level. It's just struggling. And we can easily define some levels below where the market is. Right now, I'm just trying to find some above where the market is that we can use, because those are obviously going to be a little more rare for us right now. Let's see, that 60. Really notice how that 60 is holding. So even happened again right here, 60, and then coming on back down. Over and over and over again. And it was basically it was a support level. Just boom, boom, boom. Okay? And boy, it makes me wish I went back and grabbed some of those magnets below. But let's see. What about above? We're looking for magnets above. Okay, here we go. Now we got a magnet right here above the market. You got 60, and right here we got it. Spikes on up. It's at a 230. A lot of times on the close. Notice this. We've drawn drawn a few magnets so far. 2 of those have literally been on the close of oil. What does that do? That tells you that when there's some big moves on oil itself, a lot of times you'll see those just in the last 10 minutes. That's a lot of volume to be happening. And it's in the last 10 minutes before the oil session, the oil pit session there closes. So now we got another one right around 60.75 or so. Okay? Moving on back. Trying to see what else we can find to the upside. And you can see these magnets, these are ones we did before this date, but even going back, you're seeing that there is a lot of order flow right there. Look at, it comes right down, boom, hits it, and then respects that level. And you even get the oscillation right here. This is a magnet we drew in the future. Looking backwards, we're seeing price bouncing. So this is a magnet level that has actually withstood the test of time. It goes back up, hits this, comes on back down to this magnet, goes back up to this magnet, comes on back down, falls down to the next magnet, bounces off of it. So we're seeing that these are good, not only as we draw some of these going backwards, we're actually seeing that they're being respected historically. So that's from future magnet pricing. So that lets us know that, if we did keep going back and back and back and back, we'd find, stuff lining up. Here's one that we see, and again, that's confirming that same magnet, what are within a few ticks of itself. We got 60.75 right there on this bar. We have 60.81. So give or take 5-10 ticks, and you probably want to do just a small little zone around that, sort of like how I do on deviations. I'll do a little zone But right there, that level still being protected. The 6130 is popping above it, but without any kind of real volume. Comes on back down. Let's see here. Trying to find some magnets above. Okay, this magnet, same magnet we got right there. So again, future magnets also being reflected in historical magnets. But now we got another level that we can use. I had this was a down close bar. Basically, just tell that by where the up close or where the open was on the candle there. And that puts us right around 62.16 for a bigger level there on the close. But you could also go down and say, well, what was that? Peak. And if I see two levels that are sort of close, okay, then I could go, well, I can look forward and see how they're being respected. So looking back, I can see that this level right here, this close actually looks a little better because look how it's bouncing off this one all day. And then when it breaks it, comes back up, and then it breaks right down. We only get a few bars where it respects that level. Here we get, hours and hours and hours all night. So that sometimes helps me pick between like the close or the low, just looking at, okay, when this magnet got established as a magnet with its high amount of volume, okay, and obviously it broke down, but what level was being respected that entire time? And so we can see that was the level being respected over and over and over again by the market, by the orders, and come down to, the 6220, bounce up, 6220, bounce up, 6220, bounce up, 6220, bounce up. And then finally, when it came down with strong volume, and we actually got a second magnet over here, okay? So instead of having a magnet right there, at this level, we put the magnet right here, all right? And then see if that also lines up historically and going forward. So now we're starting to get, a little bit of a game plan on the upside. Right there, we can see that magnet just got confirmed, by the way, by another magnet bar. And we're going on back by magnet. I'm meaning bars that are exceeding our 15,000, 14,000 or so threshold. Let's see. So right here, we're within ticks of a current magnet already. We do have a little bit of a middle zone there that we could look at, and we just don't want to overdo the noise. But we got to move down here, high volume on this bar right here. Okay. So that'll just give us a lower one. And we haven't really done a whole lot of lower ones. We're more looking for the upper ones. So let's keep going up. And let's see. And look at this. Again, we drew these in the future, and you can see how it's just bouncing right off these levels. It's just uncanny how this volume works. Look at that right there. And these are drawn like days in advance or weeks in advance, or in the future. Not even in advance, in the future. And then looking back, seeing that those magnets are actually consistent historically. Got a big spike right here. Again, it's on the news. So I'm going to have a hard time respecting that level, okay? I see a lot of hits, though, right here against this on this high volume. And so if I'm like, you know what, that's like a news one. There's some things you can do if you do want to record it. And, just make it, maybe a different color. So whatever you want to. I'm going to go in here, and I'm just going to make it like some sort of weird, green color. I could put it back at the normal colors. There, we'll wrap this up when we get back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender, and member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Alrighty, folks, welcome to the Diagnostic Trading Hour. So I'm just scrolling back. I'm obviously getting a lot of lower magnet levels that I've been able to, plot on the chart and use. A lot of those overlapping, or we're getting newer, better levels as we go. And I'm just going to fast forward this a little bit. We're going to jump on back until, there we go. Okay, so really had to back up to, let's see, what are we on right now? Here on the 15th of 2014, okay? And to try to finally start getting some areas really above where we're at. And we can see these magnets are pretty covered already, just basically recycling themselves again and again and again. And let's see here. So we got this magnet level right here. This was a down close, just a little bit off of where we're at. It's also a round number there on that news report. Didn't even notice that when I marked it. So that obviously gives it more validity too, just going to that 63.0 number. We got another 230 close right there. And go over here, and we can see just some more high volume happening. And sometimes, it won't even be a big move, but look what happens. That high volume happens and flies all the way down to that next magnet there, okay? So we may not always see a big move on a high volume bar. And sometimes, to me, that actually gives it a little bit more, weight when that does happen. Let's see here. We're right around that 67. This is off of news, but we can see that same level being respected over and over. And I'm going to move it to the round number, put it a little bit closer to us. Okay. I mean, it's just a few ticks off of that. And again, we still see that level right there being, solid support resistance. We're just oscillating around the magnet. All right, moving on back here. We got a little bit lower level right here. Not much of a difference there. And right there, pretty much closing on that. So, I mean, you're talking about here and here. All these prices all centering right around that 67 we also had on the news. And that's sort of interesting. You watch this high volume, boom, pulls back. About 66.95, you get another volume spike right there at about 66.86, and then we have it. News come out a couple days later when it's oscillating around that level, and eventually it just pops right on it. But so we got a solid level right there that we're comfortable with, and this just helps us track sort of what are going to be the staging grounds, what are going to be the levels that we're going to be looking for as the market continues to move up on oil, going into the summertime and everything else, and everything we got going on. The oil inventory is going down. What are those next stages? What are those important levels? And that's really going to be defined more than anything by volume. Okay, so that's what we're going to be looking at. So now let's just take this picture. I've charted it up to $70 something, and we can go over here, and we'll move this down, and this will allow us to see sort of what the next stages are and where we may see some of those big moves and big runs. So we can see like right here, the next level, 61.29, 61.68, 62.14, 63, 63.36. This becomes a big level because right here, this is where we're looking for probably like a $2 move day. Okay, up to 65.50. So when we break this 63.50 with volume, we're looking to fly on up to 65.45. So that lets us really see a big move. And we got some other big ones on the way up. So we got some big moves coming. Being aware of those magnets and where the market has been is one of the most powerful things to learn, period, in trading. So hopefully you'll, watch this a couple times and pick it up. All right, y'all have a great day. I'll see you tomorrow right here on the Diagnostic Trading Hour.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.